If you've been following cryptocurrency at all over the past few years, you've probably experienced the emotional roller coaster that comes with it. The heart-pounding excitement of watching Bitcoin soar to new heights, followed by the stomach-dropping fear as prices crashed down to earth. One day, crypto seemed like the future of money. The next day, it looked like a massive bubble that was finally bursting. Right now, you might be wondering whether you missed the boat entirely, or if there's still time to get in before the next big wave. The truth is, the story of cryptocurrency is far from over, and what's happening behind the scenes might surprise you. While mainstream media focuses on price swings and dramatic headlines, the real revolution in digital assets is happening quietly in boardrooms, government offices, and technology labs around the world. Today, we're going to cut through all the noise and examine whether crypto is genuinely making a comeback, or if it's time to write its obituary. To understand where crypto is heading, we need to first acknowledge what actually happened during the dramatic crash that dominated headlines throughout 2022 and into 2023. It wasn't just that prices fell. Entire ecosystems collapsed. Trusted platforms went bankrupt, and millions of people lost money they couldn't afford to lose. The collapse of major players like FTX, Terra Luna, and numerous other projects wasn't just a market correction. It was a reckoning that exposed the speculation, fraud, and poor risk management that had infected large parts of the crypto space. It was like watching a house of cards fall down, where each collapse triggered the next one in a cascade of failures that seemed to validate every critic who had called crypto a scam from the beginning. But here's where the story gets interesting, and why simply declaring crypto dead might be premature. While the speculative frenzy was collapsing, something else was happening in parallel. Serious institutions, governments, and technology companies were quietly continuing their work on blockchain technology and digital assets, largely separate from the get-rich-quick schemes that captured most of the media attention. It's like how the internet continued to develop real utility even during the dot-com crash of 2000. The speculation died, but the underlying technology kept evolving and finding genuine applications. The institutional adoption of cryptocurrency has been one of the most significant developments that many people have missed while focusing on price charts. Major corporations like Tesla, MicroStrategy, and Square began adding Bitcoin to their treasury reserves, treating it as a legitimate store of value rather than a speculative asset. Traditional financial institutions that once dismissed crypto as a fad started offering cryptocurrency services to their clients. Banks like JP Chase, which famously called Bitcoin a fraud, began developing their own blockchain-based payment systems and offering crypto trading services to wealthy clients. Even more significant is what's happening in the regulatory space. Rather than banning cryptocurrency outright, most major economies are working on frameworks to regulate and integrate digital assets into their existing financial systems. The European Union has developed comprehensive crypto regulations. Japan has established clear guidelines for crypto businesses. And even in the United States, despite ongoing political debates, regulatory clarity is slowly emerging. This isn't the behavior of governments that believe crypto is going away. It's the response of institutions that recognize they need to adapt to a new financial reality. The development of central bank digital currencies represents perhaps the most important validation of cryptocurrency technology. Even though CBDCs are quite different from decentralized cryptocurrencies like Bitcoin, countries around the world are experimenting with or launching digital versions of their national currencies, using blockchain technology to create more efficient payment systems. China has been testing its digital yuan with millions of users. The European Central Bank is developing a digital euro, and even the traditionally cautious Federal Reserve is researching a digital dollar. These projects prove that the core technology behind cryptocurrencies has real value, even if some of the wild speculation around various tokens was misguided. The evolution of blockchain technology itself tells a story of maturation rather than death. The early days of crypto were dominated by Bitcoin's energy-intensive proof-of-work system and Ethereum's slow, expensive transactions. But newer blockchain networks have solved many of these problems, offering faster transactions, lower fees, and more sustainable energy usage. Ethereum's transition to proof-of-stake reduced its energy consumption by over 99%, while newer networks like Solana and Avalanche can process thousands of transactions per second at a fraction of the cost of traditional payment systems. What makes this technological progress particularly significant is that it's enabling real-world applications that go far beyond simple currency transactions. Supply chain management companies are using blockchain to track products from manufacturer to consumer, ensuring authenticity and preventing counterfeiting. Healthcare organizations are exploring blockchain for secure patient data management. Real estate companies are experimenting with tokenizing property ownership to make real estate investment more accessible. These aren't speculative investments. They're practical applications of blockchain technology solving real business problems. The gaming industry provides another fascinating glimpse into crypto's potential comeback. While the initial hype around NFTs and play-to-earn games led to some spectacular failures, Game developers are quietly building more sustainable models that use blockchain technology to create genuine value for players. The concept of truly owning digital assets that can be transferred between games or sold to other players represents a fundamental shift in how we think about digital ownership. It's like the difference between renting a movie and owning a DVD. One gives you temporary access, the other gives you permanent ownership and the ability to transfer that ownership to someone else. The infrastructure supporting cryptocurrency has also matured dramatically, even during the bear market. Payment processors now routinely handle crypto transactions, making it easier for businesses to accept digital payments. Cryptocurrency ATMs have proliferated in major cities around the world. Major financial firms have launched crypto investment products, making it possible for traditional investors to gain exposure to digital assets through familiar channels like ETFs and mutual funds. This infrastructure doesn't disappear just because prices are volatile. Once it's built, it provides the foundation for future growth. For young adults and those just entering the workforce, understanding the current state of crypto is particularly important because digital assets are likely to play an increasingly important role in the global economy throughout your careers. This doesn't mean you should invest your life savings in cryptocurrency, but it does mean that understanding blockchain technology and digital assets could be valuable professional knowledge. Many companies are looking for employees who understand these technologies, and the skills involved in crypto and blockchain development are in high demand across various industries. The environmental concerns that once dominated crypto criticism are also being addressed through technological innovation and changing industry practices. While Bitcoin mining still consumes significant energy, much of it now comes from renewable sources, and miners are increasingly locating their operations where they can utilize excess renewable energy that would otherwise be wasted. Other cryptocurrencies have moved to more energy-efficient consensus mechanisms, and new projects are being designed with sustainability in mind from the beginning. It's like how the automobile industry evolved from polluting early cars to today's electric vehicles. The technology improved to address legitimate concerns. Stablecoins represent another area where crypto has found genuine utility, even during market downturns. These digital assets are designed to maintain stable values by being backed by traditional currencies or other assets, providing the benefits of blockchain technology without the volatility of speculative cryptocurrencies. Stablecoins are increasingly used for international remittances, allowing people to send money across borders faster and cheaper than traditional wire transfers. For millions of people around the world, especially those in countries with unstable currencies or limited banking infrastructure, stablecoins provide access to stable digital money and global financial services. The venture capital investment in crypto and blockchain companies tells another part of the comeback story. Even during the worst of the market crash, serious investors continued funding blockchain startups and crypto infrastructure companies. These investors aren't throwing money at get-rich-quick schemes. They're backing companies building the foundational technology for what they believe will be the future of finance and digital services. The amount of institutional money flowing into crypto infrastructure suggests that major investors see this as a temporary setback in a longer-term transformation, not the end of the story. Educational institutions have also continued expanding their blockchain and cryptocurrency programs throughout the bear market. Major universities now offer courses on blockchain technology, cryptocurrency economics, and digital asset management. Professional certification programs in blockchain development and crypto analysis have proliferated. This educational infrastructure doesn't make sense if crypto is truly dead. It suggests that institutions expect continued demand for crypto-related knowledge and skills. The globalization of cryptocurrency adoption provides another perspective on its potential comeback. While regulatory uncertainty continues in some major markets, other countries have embraced cryptocurrency as a way to attract investment and innovation. El Salvador made Bitcoin legal tender. The Central African Republic followed suit, and numerous other countries are exploring similar moves. Even in countries that haven't officially adopted cryptocurrency, millions of people use it for everyday transactions, savings, and business operations. The technical development of cryptocurrency continues at a rapid pace, with innovations like Layer 2 scaling solutions, cross-chain interoperability protocols, and more sophisticated smart contract capabilities. These aren't cosmetic improvements. They're fundamental advances that make cryptocurrency more useful, efficient, and accessible. The Lightning Network for Bitcoin, Ethereum's various Layer 2 solutions, and emerging technologies like zero-knowledge proofs are solving the scalability and privacy challenges that limited earlier cryptocurrency adoption. Decentralized finance, or DeFi, represents one of the most significant innovations to emerge from the crypto space, creating alternatives to traditional banking services that operate entirely on blockchain networks. While the speculative DeFi bubble certainly burst, the underlying technology continues to evolve, offering services like lending, borrowing, and trading without traditional intermediaries. For people in countries with limited access to banking services or those who want more control over their financial activities, DeFi provides options that simply didn't exist before cryptocurrency. The integration of artificial intelligence with blockchain technology is creating new possibilities that weren't imaginable during crypto's early days. AI-powered trading algorithms, automated smart contracts, and blockchain-based data marketplaces represent the convergence of two of the most significant technological trends of our time. This integration suggests that crypto's future might look very different from its past, with applications we're only beginning to understand. For investors trying to make sense of crypto's current state, it's important to distinguish between the technology's long-term potential and short-term price movements. Cryptocurrency prices remain volatile and speculative, influenced by everything from celebrity tweets to regulatory announcements to macroeconomic trends. But the underlying blockchain technology and the infrastructure supporting it continue to develop regardless of daily price fluctuations. It's like judging the internet's potential based on individual .com stock prices in 2001. The short-term market chaos didn't reflect the long-term transformative potential of the technology. The generational divide in cryptocurrency adoption also suggests that reports of crypto's death may be greatly exaggerated. Younger generations who grew up with digital technology are generally more comfortable with digital assets and more likely to see them as a natural evolution of money and finance. As these digital natives enter their peak earning and investing years, their preferences are likely to drive continued demand for cryptocurrency services and products. Consumer protection and security in the crypto space have improved dramatically following the high-profile failures and hacks that dominated headlines. Better security practices, insurance products for crypto holdings, and more sophisticated custody solutions are making it safer for ordinary people to hold and use cryptocurrency. While risks certainly remain, the industry has learned from its mistakes and implemented better safeguards. The macroeconomic environment also plays a role in crypto's potential comeback. With central banks around the world printing money to stimulate their economies, concerns about inflation and currency devaluation have led some investors to view cryptocurrency as a hedge against traditional monetary policy. While crypto hasn't proven to be the inflation hedge that some advocates claimed, its fixed supply characteristics continue to appeal to investors worried about long-term currency stability. Looking ahead, the question isn't whether cryptocurrency will return to its previous speculative heights. That kind of bubble behavior is neither sustainable nor healthy for the long-term development of the technology. Instead, the question is whether blockchain technology and digital assets will find sustainable, practical applications that create genuine value for users and businesses. The evidence suggests that this is already happening, even if it's not generating the same media attention as dramatic price swings. The key insight for anyone trying to understand crypto's future is that this technology is still in its early stages of development and adoption. We're probably somewhere equivalent to where the internet was in the mid-1990s, past the experimental phase, but still years away from mature, widespread adoption. Just as the internet survived the dot-com crash and went on to transform virtually every aspect of our lives, cryptocurrency and blockchain technology may be on a similar trajectory, with the current downturn representing a necessary maturation process rather than a final failure. Whether crypto is making a comeback depends largely on how you define success. If success means returning to the speculative mania and get-rich-quick promises of the previous bubble, then probably not, and that's probably for the best. But if success means building sustainable, useful applications of blockchain technology that solve real problems and create genuine value, then the comeback is already underway. It's happening quietly, in corporate boardrooms, in government offices, and technology labs, as serious people work on serious applications of this transformative technology. The future of crypto might be less flashy than its past, but it's likely to be much more substantial and lasting. Quick question before you leave. What's your biggest financial challenge right now? Drop it in the comments, and I might just create a video addressing it. If this helped solve one of your money problems, give it a thumbs up and subscribe for more practical financial advice that actually works.